Hi, this is Emily Matthews. I'm a realtor serving the Tri-County area of Sheboygan, Calumet, and Manitowoc Counties, here with the monthly housing market update. So looking at October 2023, there were 194 sales. That's a little better than September and not too far down from October in 2022. We can see here that the list prices are up, comparatively, and the sale price is the same thing. Days on market are pretty much the same as they were the previous month and the previous year. Currently, we have 357 houses on the market and 158 have offers. The average list price is $346,611. I believe this is skewed upward by the fact that we have a top-heavy market once again. We have 57 of the houses for sale that are between $500,000 and $1 million. That's where I set my cutoff. 14 of these have offers, so that's only about 25%. The average list price is up again from last month. It's $680,726, and the days on market are up a little over 2 weeks. The highest priced one has been on the market almost a year and a half. So this gives you an idea of what's going on in this very high price range. There are still people buying $1 million houses, and some are paying cash, but they're spoiled for choice because there are quite a number of those comparatively on the market. Under $500,000, we have 300 of those, and about half, 144, have offers. The average list price is $283,129, and the days on market is pretty much the same as last month. I think that was 45. So we are still seeing these price bracket differences, and I think that they're getting bigger. We also have supply and demand issues, as evidenced by bidding wars. My last 2 listings were comparatively, one was under 300, one was under 200,000, and each one had 6 offers. So if that's not a bidding war, I don't know what is. And of course, they are one already closed and one will be closing. So they're selling fast in the price brackets that most people can afford. Now here's an article from Bloomberg, and it's talking about a $400,000 loan. I don't think there's too many people around here with $400,000 loans. And yes, that is a big jump in what your monthly payment is. But the problem is here, people don't want to move unless they have to. Unless you're really getting like the house of your dreams, or you have to move for a job or some other reason like that, you're going to stay in your house and you're not going to put it for sale. So high interest rates are not helping the supply and demand issue at all, and they're not helping the price issue because of supply and demand. So I don't know what the Fed was hoping to accomplish by these high interest rates, but it's certainly not pressing down on house prices. And here, this is from Mortgage News Daily, and it's saying new homes are doing great while pending homes suffer. Well, you can figure out why. That's because a new build doesn't have a seller that's going to lose a low interest rate in favor of a higher one when they move. A new build is going to be just what it is. Nobody ever owned it before, and that's why new builds are doing better. So again, we're seeing supply and demand in both brackets. By that I mean both price brackets, 0 to 500 and then 500 and above. Interest rate is between 7 and 8%. I checked a couple sources, and that's where they're fluctuating and varying in. I found out another source of information. Credit card interest rates are also going up. That makes me wonder, are car loan interest rates going to go up, or are they already up? We are still seeing a good market, especially in investments. Duplexes are still selling, and they're still getting multiple offers. And I think this is a little of an anomaly. It says a 21% price increase over last October. I think that's because this October just passed, we were still having sort of a summer market. And last year at this time, there was the seasonal slowdown. So my little slogan here, the best time to buy real estate is still yesterday, because what if these interest rates keep going up? One of these articles that I mentioned said that we're seeing like the most unaffordable housing since 1980, the early 1980s. Well, in the early 1980s, interest rates were 18%, which is 10% more than 8, and house prices were going up then. So I don't know how it's to be expected that these prices will go down. So if you're thinking about making a move, please don't wait until prices get better, because they likely won't. And please don't wait till interest rates get better, because we don't have anything to say that that's going to happen. And then again, for more information, you can go to housingmarketcycles.com. It's kind of a generic webinar explaining housing cycles. I will say that the housing market does go in cycles, and it has always traditionally swung between a buyer's market and a seller's market. We have seen a prolonged seller's market, so if it does turn into a buyer's market, it won't be surprising to me. That is part of the normal cycle. Until next month, this is Emily Matthews, here to help you with all your real estate needs.